Hey there, money mavens. The Federal Reserve made a big move today, and it's time to break it down. We're talking interest rates, folks, the lifeblood of our economy. The Fed's announcement impacts everything from your mortgage to your savings account. That's why we're diving deep into this news, making sure you understand what it all means for your hard-earned cash. Buckle up, because we're about to navigate the twists and turns of interest rates, inflation, and the whole economic shebang. Get ready to be informed, empowered, and ahead of the game. The Federal Reserve, the big kahuna of U.S. monetary policy, just raised interest rates again. This move is part of their ongoing strategy to manage the economy. They bumped the federal funds rate by insert basis point increase basis points, a significant increase that has everyone talking. This key rate now sits at insert new interest rate range %, marking a new chapter in the financial landscape. Remember, this rate acts like a benchmark, setting the tone for various other interest rates in the economy. It influences the interest rates banks charge each other for overnight loans, which in turn affects the rates we see as consumers. And guess what? Those costs trickle down to us, impacting everything from credit card interest to business loans, making borrowing more expensive. This is the insert number rate hike this year, a clear indication of the Fed's aggressive stance. The Fed's trying to cool down the economy and wrestle inflation under control, aiming for a more stable financial environment. But is it working? Let's dig deeper and explore the broader implications of these rate hikes on our daily lives and the overall economy. The economy's playing a high-stakes game right now, and everyone is watching closely. On one hand, inflation is still hotter than a firecracker on the 4th of July, making everyday expenses feel like a burden. The Consumer Price Index, or CPI, jumped insert CPI percentage change % in the past year. Ouch! This means higher prices for goods and services. On the other hand, the job market's strong, providing opportunities for many. Unemployment's sitting at a low, insert current unemployment rate %, which is great news for those seeking employment. That's good news for job seekers, but it also means the Fed might keep hiking rates to prevent the economy from overheating, which could impact borrowing costs. It's a delicate balancing act, requiring careful consideration and precise actions. The Fed wants to tame inflation without sending the economy into a tailspin, a challenging task indeed. Talk about walking a tightrope. Every step must be calculated to avoid a fall. Section 4. Your wallet on the line. Mortgages, loans, savings. Impacted. Okay, time to talk about how this interest rate hike affects your wallet. First up, mortgages. If you're thinking about buying a house, be prepared for higher mortgage rates. This could mean rethinking your budget or even delaying your purchase. Higher rates translate to bigger monthly payments, which can strain your finances. And it's not just mortgages. Credit card interest rates, auto loan rates, and personal loan rates are all going up too. This means that any form of borrowing will now cost you more. Borrowing money just got more expensive, making it crucial to manage your debt wisely. But hey, there's a silver lining. Higher interest rates aren't all bad news. Savings accounts and certificates of deposit, or CDs, are finally starting to offer decent interest rates. This is great news for savers, so at least you can earn a little something on your hard-earned savings. It's a good time to review your savings strategy and make the most of these higher rates. Section 5. Experts chime in. What the pros are saying. Let's see what the financial gurus are saying about this interest rate increase. Economist, insert economist name, believes the Fed is on the right track, stating, insert economist quote. However, not everyone's on board. Market analyst, insert analyst name, warns that, insert analyst quote, expressing concerns about the potential impact on economic growth. As always, there are different perspectives on the Fed's move. It's important to stay informed and make financial decisions that align with your own personal circumstances. Section 6. Crystal ball time. What's next for interest rates? So, what's next for interest rates? That's the million-dollar question. The Fed's indicated that more rate hikes could be coming down the pipeline. They're laser-focused on bringing inflation down to their 2% target. But it's not a done deal. The Fed will be closely watching economic data, like inflation and jobs reports, to guide their decisions. One thing's for sure, the interest rate roller coaster isn't over yet. Stay tuned, folks, and remember, knowledge is power when it comes to navigating the markets.